Hello, my name is Neil George, and you are joining me live on Facebook at the Money Show in Dallas, Texas. And joining me is one of my longtime friends, Jon Markman, who heads up Tech Trend Trader, as well as some other great publications. Thank you very much for joining me.
Howdy, partner.
Howdy, partner.
As they say in Dallas.
As we are in Dallas. Where's your 10-gallon hat, though?
Must have left it back in my room, sorry.
I'm sorry. Well, again, both of us probably could use a hat.
We could use a hat.
Time, yes. So one of the interesting things about the markets right now is the technology space. That's been the area that seems to have ignored that little correction we saw in the first part of the year. You've seen a lot of interest in this space. People are hiring into some well-known names. What is your take on tech? Because that's really been one of your fortes of recent.
Well, technology just makes everything that companies do faster, more efficient. It allows companies to do what they're already doing, but do it better and less expensively. So it's a natural.
So we're going from the steam engine to internal combustion to nuclear power, et cetera.
It's like the difference between moving from steam power to electricity back 100 years ago. Now we're using artificial intelligence and other techniques to bring us from the electrical age into the AI age.
And so with that in mind, I think what you and I have been talking about of recent is that manufacturing has really gotten very, very tech focused. And that's been an area that's been a great deal of interest for you. What is happening in that space, and what are some of the names that you really are drawn to right now?
The public thinks about software and hardware in the realm of the FAANG stocks, right? The Facebook, Amazon, Alphabet, Netflix, and Google. And I don't really I think that those companies are actually extremely important, but they're not the be-all and end-all of technology. There's a lot of industrial companies that are applying technology in new ways that are even more interesting than what you see in those traditional tech stocks. Now, I look at a company like Lockheed, for instance, which is using tremendous its deep background in space technology to build better terrestrial rockets and jet aircraft. You look at a company like Northrop Grumman, which has also applied AI techniques to its manufacturing floor, created better ships and jet aircraft. So I think you need to sort of broaden your understanding of exactly what technology is to include what I would call industrial tech.
So with you mentioned those names are largely in the defense contractor part of the realm. Doesn't that have the additional risk of some of the political threat? I mean, obviously the helping hand that government can be there to help or to slap.
One thing I'm not worried about is peace breaking out, because as the United States becomes more insular, America first, etc., Europe is going to do the same. China is becoming more about China first. So we're kind of all retreating to our various tribal instincts. And we know one thing about tribal instincts is that it breeds competition. And we're going to see more and more real battles break out, hard battles, as well as software battles. In fact, the next big war, let's say World War III, could be a cybersecurity battle rather than a hard battle. And the companies like Lockheed and Northrop are really stepping up to that challenge and going to provide the United States with an edge. And so those are the companies I'm least worried about going forward should the market roll over or should the economy moderate.
Now, we were talking about sort of war game scenarios of some of those companies. You also have another area of focus that you think is very attractive, which is actually in the gaming market.
Yeah, I mean, I hate to sound sort of warmongering or violent, I would say, but I do think that the instincts that are inherent in America First or China First are also inherent in the gaming instinct. So we're seeing tremendous growth in the video gaming industry, led by companies like Activision Blizzard, Take-Two Entertainment, and Electronic Arts. And I think that if you look forward another 10 years, you could see film watching diminish, TV watching diminish, music watching diminish.
Sports segment.
You can already see sports. You can also see like NFL stadiums and MLB stadiums are getting less crowded, and a lot of millennials and even older people are playing video games like never before. And these companies are incredibly, I wouldn't say cheap, but they're cheap relative to their prospects over the next 5 to 10 years.
You had a particular story that really grabbed my interest. You were telling me a moment ago, was looking at one of the gaming products that actually has sort of an embedded cryptocurrency. Maybe you could describe a little bit what's going on there.
Well, we always want to say, investors always want companies that mint money, right? So video game companies literally do mint money because they will create a game that requires its players who are already paid to play the game to buy cryptocurrencies, a type of cryptocurrency, in order to advance their character. And they can do that endlessly for all their games. And they can create serial versions of each of their games, and in each of those serial versions of their games, add new currencies that customers have to buy, providing them with an unending stream of money.
So again, you're kind of locking in that customer gamer into that whole business model.
I mean, these tokens only cost 50 cents or $1, but it adds up.
I can imagine fairly quickly.
Yeah.
Well, John, thank you very much for sharing your thoughts on war games as well as actually gaming games.
You're very welcome.
And again, it was Jon Markman. He's joining me. I'm Neil George. We are live at the Money Show in Dallas, Texas. Thank you for watching.